Corn and soybeans ending higher on Monday. Dave Chatterton is back with analysis. Okay, did the support in corn and soybeans come from just corrective buying or all of these export sales that we've seen on the flash reports?
Yeah, Michelle, something to do with a little bit of both, but I think the former kind of carries the day here. I think we're in a situation where the export sales that we've seen, particularly the flash sales today, I mean, they've been impressive on corn to Mexico here of late, but not necessarily out of character. And we'll take all the improvement, all the sales that we can get here because we're going to need them. I think China, remains kind of the one that's absent from that marketplace. But the action, if you go back into into last week and look into this week as well, I think has been more about money flow and kind of, what's happened here with fund positioning. We had funds get very close to covering almost their entire short. We had a record short in the summer. We came back to a very neutral position to start last week. And then a big flush of selling by the funds on the order of 50,000 contracts plus in the corn, almost 20,000 contracts in the beans. Today, after seeing that on the COT report Friday, we come right back out. Funds buyers on kind of a slow news day, light volume trade day, pushing the markets higher as they kind of position to get into a little bit more neutral stance. And certainly, the election is in play here. I'm not one to talk politics, but I think the market is concerned about, the polls and a potential Trump victory and what that might mean for trade policy over a potential, Harris victory and what that might mean. And so two very different divergent situations there. And I think speculators wanted to be a little bit more neutral as we get towards the election. And right after that, the USDA report coming up in the second week of November.
So Dave, do you get this tug of war back and forth then? The specs sell, you get down into value levels where end users come in and buy, and then it goes back and forth or not?
Yeah, I think that's right where we're at, Michelle. I think, funds don't necessarily want to be heavily short. They don't also necessarily be heavily long either at this particular point. We're kind of in a little bit of a standoff. We've got some harvest pressure on top of the market that's kind of bleeding through as well here. And, as we sort that out. And so for the near term here, like I said, election just ahead. I think if you look at what's going on and, with the Chinese economy, we've got two wars going. We've got the inflation play, the Fed meeting. All kinds of stuff going on as it always is. But I think for right now, it's a neutral, choppy, sideways type of a feeling in the marketplace without some fresh news.
So can we at least say for the time being, corn and soybeans have probably been able to hold contract lows and will be able to going forward?
Yeah, I think it's a pretty safe bet, particularly in corn. It looks like we're stuck in a kind of a broader, $4.30 to $4 to $4.30 or $4.34 range. Beans haven't been able to push back above that $10 level. I think they're going to have trouble doing that, Michelle, unless we get, a weather problem redeveloping in South America, particularly in Brazil. On the downside, again, I don't think there's the appetite here to continue to push this lower. Although when you look at these balance sheets, we have a more constructive view, of course, in corn than we do in soybeans right now. And so soybeans, unfortunately, kind of continue to be the anchor, I think, of the complex at the moment.
Yeah, so let's talk a little bit more about the tariff, the trade war situation, because last week when former President Trump kind of moved ahead in the polls, that's when we started to get nervous again. Is it all rhetoric? I mean, is he serious about that? And what could it mean for the market?
Yeah, I don't think anybody knows. And that's the I guess the unknown or the angst that the market is feeling here. Certainly, I think you have to look at a Trump victory as a potential for a trade war with China, good or bad, depending on how that outcome comes longer term. But certainly in the near term, that could have the markets on a little bit of the defensive here. We've seen China be a very, I'll call it, timid buyer of U.S. soybeans to this particular point, buy almost no corn from the U.S. here. They've been a steady buyer, but a small buyer of soybeans. And without a big improvement from them, we're really in a situation where we're going to have trouble carrying the day to that USDA export number right now. Having said that, we just don't know, Michelle. I think there's, a lot of speculation going on. We can remember back to the election in 2020 or 2016 and how that went, and the financial markets taking a deep plunge and then running right back up in the same evening. So certainly the volatility factor, I think, could be out there. We've been through it once before. I think we're more prepared than we were last time around, but the unknown is kind of in the back of a lot of these traders' minds.
Yeah. And you mentioned the South American crop, and obviously if they do produce the record crop that is being forecasted, that could really put a knife in the soybean market. But what's your sense of how much rain they've received so far and how much help it is having in terms of their planting progress?
Yeah, I mean, it's certainly improvement. I don't know that it's ideal. I don't know that it ever is, but certainly we've seen, them aggressively start to plant soybeans in central and northern Brazil in the areas that were dry. And the way that the patterns work down there, the monsoonal pattern in Brazil is that once it typically kind of starts off, it continues to go, and we'll get the rains that are needed to get the crop in. I think, from that point, it's how the growing season turns out. Our sources down there indicate that, at this current pace, we'll be a little bit behind. As I mentioned, as we talked before, I mean, the current pace right now is the slowest since 2021. And in that year, we had a very good end to the rest of the growing season, and actually a record yield on soybeans. Now, there's probably about a third of that safrinha corn crop right now, Michelle, that's in potential of being planted late because of the way these soybeans are going to go in. But that's an argument that we'll take up at another day. So I think at this point, yeah, I mean, when you look at what our carryout figure is here, and you add on top of some of these STEMI numbers that the USDA, CONAB, and other private analysts have put out for Brazil, with another record crop in that 165 to 169 million metric ton range, we have a pretty steep mountain to keep soybeans from growing sharply year over year on a global basis, soybean stocks.
Gotcha. What about the wheat market? It looked initially like it wanted to follow corn and soybeans, especially with maybe some rains missed over the weekend in some of those winter wheat areas of the central and southern plains. But can that market move higher here when Russia keeps flip-flopping on their export policy?
Well, we know one thing about wheat: it can be pretty volatile, and it doesn't always have to make a lot of sense in our view of the fundamentals of the marketplace. So certainly we can have those days, but I think in general, we're still in a very defensive market, mindset when it comes to wheat. And until we see some slowdown in these Russian offers, and they're basically they're setting, the Black Sea is setting the export market. Until that changes, I think we're struggling just a little bit. We are certainly watching what's happening in the plains here, and the rain is a little bit disappointing here through late last week and over the weekend. And when we look at the drought maps, I mean, they're getting to be a little bit concerning. It's not planting time for row crops yet, but in terms of wheat, we do need to establish that crop going into into the winter. And so far, we're coming up a little bit short on these rains. We've got some chances here this week, and hopefully going to pick up a little bit of that.
Yeah. And the cattle market set back here today, despite the fact that we had steady to better cash trade last week. And there's a lot of other bullish factors that certainly could push the market. Are you concerned right now that we have this divergence? Are the funds going to continue to defend this long or not?
Yeah, it's going to be interesting. Funds have been aggressive buyers. They bought another 9,000 contracts on the COT data last week, puts them at, long right around that 88,000 contract mark. Not a record long, but certainly something that's significant. And, momentum wise, as you said, we're trying to challenge these contract highs, and these highs that go back to last spring are between this 188.50 and 190 level. And it seems like we're having a little bit of trouble doing that. So in order to kind of, keep the ship and the momentum moving to the upside, we'll have to do that. As you mentioned last week, steady to higher cash cattle trade. I think we had the feeder index creeping higher. We had box beef, I think, outdo even the most bullish expectations, up $9 a week over week. Record retail prices, record cattle weights, slaughter that's advancing, cracker margins that are improving. Yeah. So a lot of things should be pushing this market up. And the old saying, when you get bullish news in the market, can't go higher. It's not a bullish market. So, we'll give it a chance here. It's had a long tail to the upside here, taking a little bit of a break on the charts right now, still a little bit unresolved, whether that's a little bit of a rest stop in an otherwise bullish pattern, or whether we're setting up to get a correction. But if we can't get through this 190 top here relatively soon, I think there's going to be a little defection here in a few of these funds that fall out.
Yeah, no doubt. We do have a cattle on feed report coming up on Friday. Last October is when we kind of flipped the market over after hitting those record highs. So is there maybe a little caution as a result of that too?
Well, I think it's in the back of traders' minds, sure. And I mean, it's something, predicting the USDA and kind of what they do, whether it's on the grain side, the cattle side, I think, or any other side, always a little bit of a challenge in kind of how these numbers come out and how they square up. But we'll take that, and I think that we'll take that under advisement. We'll take it as it comes, and if we have to react to it, we will. So I think it's really more about just keeping the momentum in the trade for whatever reason that you want to come up with. We've seen the funds make a very clear effort to get long the meat complex, both in the pork and the cattle sides of the complex, and have done that really over the last 6 to 7 weeks. Been very consistent buyers, and so I don't know that I have a strong opinion on what that's trying to tell us, other than I think they're playing the technical end of the market. And if we put that in jeopardy, that things could change rather quickly.
Yeah, and since you mentioned that, new highs for the move again today in the hog market. It seems like the funds buy on every break here. We're not that far from the contract high in the December. Do we take that out? And if we do, how much higher do we go?
Yeah, I think very similar situation to the cattle. I mean, we've got a little bit less significant fund position in the hogs. There were buyers of about 4 to 5,000 contracts last week, net long about 75,000. So again, significant, but not a record high, but gives them a little more ammunition maybe on that front. And technically, if they think they can move the market and keep the momentum going higher, they're going to do that. We've seen the hog market up 7 of the last 9 weeks. We've had a very strong and consistent upward pattern in the futures going all the way back to August. So a lot of things going in the favor of this market right now. I think slaughter rates there have been a little subpar compared to the hog and pigs report. Production not quite as stemmy as what we've seen in the beef side of the complex. Exports have been very strong. So a little bit more fundamental traction in this particular market, but it's still a question of momentum and keeping that fund money or that speculative money intact here.
No doubt. All right. Thanks so much, Dave Chatterton with Strategic Farm Marketing. That is Markets Down.